Interest rates have been hiking up this year, and maybe you're tired of renting. Maybe you need a little bit more space. Maybe you're in a house with a low interest rate, and if you're gonna buy a new house, your interest rate's higher, and that's not enticing. Here are 4 things that you can do to get a low monthly mortgage payment in 2023. At the end of the video, I'm going to show you exactly how you can buy a $700,000 home and have your mortgage payment every single month only be $1,066. Method 1, seller financing. So what is seller financing? Basically, you make an offer on a home for sale directly to the seller, requesting that the seller finance you. It basically almost cuts your payment in half if you were to get a normal interest rate with a bank on that home. It's a huge savings for you to have the seller finance it. So for example, if you were to buy a $700,000 home through a normal bank, your principal and interest could be over $3,500. However, if you were to finance through the seller and negotiate and get a 4% interest rate, your payment is going to drop over $1,000 a month. What are some of the nitty-gritties and nuances in seller financing? Well, first, the seller is going to most likely do what's called a wraparound mortgage. So their existing mortgage stays in place on the house in their name on their credit. If they stay on title and they have a bankruptcy, liens, or anything that happens to them, it's going to come onto your house, even though you paid them a chunk of money for it and own it. That could be devastating because you're now required to pay it off. Method number 2. The second way you could get a low monthly mortgage payment is by assuming the seller's loan. When you assume a loan, you are actually working directly with the bank. The loan becomes in your name and the seller is gone. This is the preferred method. The awesome thing about this is you can get a really low interest rate. When do you not want to assume someone's loan? Well, let's say that the house is $700,000 to purchase. Let's say the person's loan is $130,000. That means in order to buy it, you have to come up with almost $600,000 in cash to buy the house. If you don't have a lot of free cash, doing an assumption on that house may not be a good idea. Every scenario is going to be different, but it just depends on what their mortgage is and what your purchase price is. For example, I have a listing right now at $725,000. The loan on it is $530,000. You could get the interest rate of 3.125% on that house. However, you will need to bring in $200,000 as a down payment to get that incredible rate. So the only type of loans that you can assume usually are FHA loans and VA loans. Both of those loans are government insured loans. Now, when you're going to assume those loans, it could take some time because the government's not all that fast. So you may have to wait a few months in order to get that process complete. Now, there can be some conventional loans that are assumable, but 99.9% of conventional loans are not assumable. So the ones to look for are the ones where sellers have an FHA or VA loan that you might be able to assume their low interest rate. The third way to get a low monthly mortgage payment in 2023 is to buy down the interest rate. Just last month, I was selling a property and the buyer went through it and they loved it. They wanted it. It was their favorite house they had ever seen. Well, all of a sudden, they disappeared. I called him every day for a week trying to get him to pick up the phone. Finally, he picked up the phone and I said, "Why have you not done an offer?" And he said, "Well, Dave, they found out that they couldn't afford it. They can't afford that much. They are crushed. So we're planning on looking at more homes." I said, "Hey, wait a second. Let's buy down their interest rate." He said, "What do you mean?" I explained to him that the seller could pay closing costs for the buyer, which would buy down the interest rate and make it so they could afford it. He got in touch with the lender. They figured out that they could afford that house if we paid their closing costs to buy down the interest rate. Now, in buying down the interest rate on your loan, you have a couple options. Is one, you can pay for the buy down yourself. Two, you can negotiate with the lender and lower your costs on the loan. Or three, you can negotiate with the seller and have the seller buy down the rate for you. The fourth way you can get a low monthly mortgage payment on your home in 2023 is by buying a home with an ADU. What is an ADU? It's an accessory dwelling unit. Basically, you rent out part of the house to someone else. Doing this could pay for a lot of your mortgage monthly payment, or in some cases, it might even pay for the whole thing. The first characteristic in what makes a good ADU is being able to have its own entrance, its separate entrance to the unit itself. The second one is being able to have its own kitchen and bathroom. The third one is to have its own laundry. You find an ADU that has all three of those components, then it's ready to be rented out. So if you have to get in and out of the unit through the window and you can't actually live in there for a full week because it doesn't have a stove or anything, it's not an ADU. You can't rent those shacks out. You need to check with the city on what the rules and requirements are for your home to qualify in having an ADU. Remember when I said you could get a $700,000 home and pay only $1,066 a month for that house? Well, here's how you do it. Right now in Tooele, you could get a brand new home and you would mix and match some of the methods that we just talked about. The first one is that you would get this home from the builder, seller financed. You put 20% down on this home and they are going to give you a 4% interest rate in seller financing the home directly to you. Now, you have one more step in order to get that payment down. Once you rent out that ADU in the basement, your payment every single month is now $1,066. You can't find rent that low. Give me a call or a text. I'd love to give you options on how you can utilize these methods.